Hello folks, this is Man, your host for the day, and today in this video we will talk about growth stocks and a few topics related to them, such as the characteristics, benefits and indicators. So let's begin. What are growth stocks? So दोस्तों, growth stocks होता क्या है? A growth stock is defined as a group of shares or a specific share of a company that is expected to grow faster than the market's average growth rate. These stocks have no dividend payout ratio. If you think carefully, growth stocks benefit those who hold them because they can sell them for a premium due to their inherent character traits or providing returns above and beyond the market offering. Then this incentive is just enough to steer investors in the direction to create demand for them. As a result, the company's goal of attracting investors through dividend payouts as a primary objective has changed. Growth stock issuers are typically companies that want to reinvest any earnings they receive in order to accelerate growth in the short term. When investors invest in growth stocks, they expect to benefit from capital gains when they ultimately sell their shares. So friends, now that we have understood what growth stocks are, चलिए जानते हैं इनके features, advantage and indicators. Features of growth stock. So here are a few features of growth stocks that you may want to know. Rapid expansion. Growth stocks, as the name implies, have a substantially high growth rate than the overall market. It implies that the stocks are growing at a faster rate than the market average. Dividends are low or non-existent. As previously stated, growth stocks do not pay dividends. They typically pay either low or no dividends at all. Because growth companies grow at rapid pace, they typically want to reinvest their retained earnings back into the company to increase its revenue generating capacity. Advantage in the marketplace. On the competitive landscape, growth stocks have an advantage over their competitors. Growth companies typically exhibit significantly faster growth because they have a competitive edge over other companies in the same sector. The competence provides growth companies with a unique selling proposition that allows them to sell and grow more effectively than other companies in the same industry. Customer loyalty. Since growth companies have a competitive edge over other rivals within the industry, they tend to enjoy a loyal, scaling consumer base. The USP that such companies enjoy over their competitors ensures a constantly growing consumer base, which contributes to their increasing growth rate. Profitable. Investors don't make much money in the short term because growth stocks pay either very low or no dividends. The long-term outlook, on the other hand, is completely different. Investors are able to produce significant revenue through capital gains. After seeing growth companies experience twofold, threefold, or multifold expansion over a decade. Risk element involved. Investments every time come with some amount of risk. Such a fact is not also unfamiliar to growth stocks. While growth stocks are a very appealing investment option and can yield significant profits in the long term, the level of uncertainty concerning them in the short term adds to a huge risk factor. The fact that growth stocks typically pay low or no dividends add to the uncertainty. As a result, the investors only benefit from the investment if the company performs well in the long run. In the rare case that the company fails to perform, the investor may incur losses. Hence, like every investment, there is a risk factor attached to growth stocks. Alright, then before I tell you the advantages of growth stock, what are you waiting for? Please like the video and don't forget to subscribe the channel. Growth stocks आपको बहुत सारे benefits दे सकता है. It can provide great returns in the form of capital gains when sold, if not in the form of dividends. I mean, it is only fair as the amount you can gain from capital gains is unmatched to any sort of ancillary or indirect returns you can get from the stocks. Growth stocks are always in demand due to their capability to grow beyond the average market growth rate, which makes investors want to invest in them. If you want to acquire wealth in the next 4 years, growth stocks are just an investment for you. Investments in growth stock can be discovered in long term. It is subject to long-term capital gains, but a grant of relief of up to ₹1 lakh. They are subject to significant risk, but offer a high reward ratio too. So, if the company is performing well, you will make massive profits in the future. When you invest in growth stocks, you will earn greater yields than when you invest in other stocks. Growth stocks offer करते हैं a good chance of diversifying your portfolio if you invest in the best growth stocks of different sector industries. Indicators used to assess these stocks. Guys, I would like to point out few indicators that are used to assess these stocks. A new technology. An upcoming new technology is a part of most growth stocks stories, though not all. A new company in an established but lucrative field with a minor competitive advantage can be a growth stock. This is not something you can search for, but many of these hot technological advances are covered before the companies behind them go public. High PE ratios. Most growth stocks with positive earnings have extremely high PE ratios because it is expected that growth will accelerate and catch up. It also makes sense for companies on the verge of releasing all of their hard work. A substandard growth story. Growth stories will hit a snag. If insane growth continued indefinitely, there would be an endless slew of bigger and bigger companies and everyone would be wealthy or at least have large bank accounts if they invested. Growth stories eventually fizzle, and because the market swings like a pendulum, the end of perceived growth can have a significant negative impact on a stock. How useful is the PEG ratio? The PEG ratio or price to earnings growth ratio depicts the current price in relation to the company's expected growth. The estimates are a major stumbling block. The estimates are typically for 5 years, but other measures exist. However, because there are only educated guesses, they should be taken with a grain of salt. Revenue over earnings growth. Another way to look for growth stock is to search for high revenue growth on year-on-year or sequential basis. This is likely to be the least useful because it can generate a large number of false positives. Nevertheless, it does showcase how early stage companies are all about earnings and not necessarily profit. I hope you enjoyed and learned a lot from watching this video, and now we are well aware of growth stocks, their characteristics, advantages and indicators. I hope to bring more of these videos in the future. Until then, please like, share, comment and subscribe. Good luck and keep learning.